Good afternoon, everybody. This is Thomas Wood with Microquant. Again, I'm the host of the Microquant Live Trading Room. Once more, we're going to be taking a look at the Live Trading Room trades of the day. We had another great day, another up day. We're now going on 12 weeks with only having 3 down days, which is really great in my opinion. We had, again, a lot of really good trades, several that were up a couple $100 per contract. But I'm going to point out the 3 best ones that we had, and that was in gold, soy, and the overall best one was crude oil. The first one in gold, we took a short. We took out about $4.90 an ounce, which is about $490 a contract, which is a great trade. You can see where this red arrow is where we shorted. We were moderately overvalued. Up here we had high prices. But then if you looked at the momentum indicator, we had a lower high momentum indicator line and a lower high histogram. Gave us the okay to go ahead and short. We took the short, risking the high. So we were risking only about $100 a contract, and then covered at significantly undervalued at this lower red bar portion, which again, that gave us profits of about $490 per contract. The next trade that we had that was really good was a long in soy, and you can see here we were long down from these moderately undervalued price points in soy off of this hourly chart. You can see we came down, we hit undervalued, moderately undervalued, but then we had support from yesterday's lows and the intraday lows from Monday. So we're looking at a support trade. The place that we actually got in on the trade at was based off of a 1-minute chart. We come all the way back over here. We got long right in on this bar right here. The reason we did that, we had the drop. We had a slight bullish divergence on the histogram where we had lower prices but a slightly higher low on the histogram. The market kind of stalled out, so we got long, risking the lows with our stop loss. And because we were right on the support, so we were looking for it to rally, we ended up taking about 10 cents out a bushel, which ends up being about $500 a contract to the upside. Another great trade. Now the last trade, and what I would call the trade of the day, there were actually 3 of them. We had 3 opportunities that we highlighted in the trading room for getting long in crude. The first one, and the best one, would have gotten you profits of $1.90 a barrel roughly. The second one would have allowed you to get about $1.50 a barrel roughly, and the third one would have roughly been $1.35 a barrel. Either way, you're taking in over $1,300 a contract. If you got in on the very bottom, which I know several traders did, we actually took profits of about $2,000 a barrel, just about 190, depending on where your fills were. Now the first opportunity that we tried getting long in crude oil was off of this bullish divergence here on this 2-minute chart. You can see where these blue and red arrows are. So we got long at undervalued. As soon as we hit overvalued, we locked in half profit and moved our stop to break even, because we were basically trying to find the bottom of this market before it turned and catch the wave to the upside. We ended up getting stopped out of there break even. So we went ahead and stayed out for a little while. The next time we got in was down at this blue arrow right here. And that we actually had a fill. I had a fill of 95.08 for my long, risking the lows. And again, we were right on a support level based off of our 240-minute chart, which I'll show you in just a minute. And that ended up getting us, like I said, around $1.90 a barrel, which is about $1,900 per contract. The next opportunity we saw to get in was this undervalued price point right here. You can see we're coming down moderately undervalued. Our regression line had since turned to an upward trend from a downtrend. So we had opportunity to get long right in there. Depending on your fill, that would have given you the opportunity to take out around $1.50 a barrel. And then the last opportunity we talked about getting long was right after the petroleum status report. The market didn't have as big of a reaction as we were looking for. It ended up dipping down into moderately undervalued. We talked about buying at moderately undervalued and risking just a few ticks beyond the low. That ended up being a great entry as well. Would have given you the opportunity to take about $1.35 per barrel out to the upside. Now the 240-minute support level that I was talking about is actually from the lows on January 23rd and the highs back on January 10th. And the reason we were looking at a support has been a key turning point in this market several times. We were also significantly undervalued on that 240-minute chart. Ended up being a great opportunity to get long. We got long, risking just beyond that support level, so about $100 a contract. Ended up being, like I said, great opportunity for us to have gotten in. Took about $1.90 a barrel out to the upside if you got in on that first support level. Now, that concludes today's trade of the day. Once more, we had a really good trading room. I look forward to seeing everybody tomorrow morning. We also have, don't forget, the value candlestick reversal course starts tomorrow, and that is tomorrow night and Friday night, as well as the following entire trading room next week. We'll be trading those reversal patterns. One of my favorite ways to trade personally, and it works extremely well in my opinion. So until next time, happy trading.